So our expectation is you'll have some sort of localized low and another up, and you'll still have a third sell-off before you're likely to break out the channel. So we don't think the next month or two is going to be particularly positive for gold. In terms of buying and investing, you're going to get, these are very good accumulation points. I only look on the long side on gold. I think that will be a good entry to buy gold and or silver. And wherever that low comes in, it'll be a good entry. And I would expect that close to being the final. And then you'll recover, but you won't go straight to a melter. In terms of our bull expectations, particularly where we've given numbers on silver, we still see that in the years to come, you'll be running $333 and going higher. So on the big time frame, we haven't changed any of our opinions. This is just a longer pullback than most people expected.
Gold and silver are breaking their weeks-long losing streak, holding tight near a 2-week high as freshly cooled U.S. jobs numbers completely shake up the interest rate outlook. With gold stabilizing around $4,175 and silver charging past $62, investors are racing to figure out if this sudden July rebound is a true market reversal or just a temporary trap before another punishing downturn. To cut through the confusion, we are joined by legendary market analyst Francishunt. He warns that we are currently caught in a lengthy, painful second sell-off phase, meaning the next month or two likely won't be positive for gold. However, his long-term outlook remains unchanged. Francis views this grueling pullback as a prime accumulation window before silver eventually rockets to a staggering $333 and higher in the years to come. Is this painful grind actually the ultimate buying opportunity of the decade, or is a final, brutal drop about to catch everyone off guard? Stay tuned to find out. But before that, if you find this analysis helpful, please hit the like button, subscribe, and turn on notifications so you never miss our deep dives into the markets. Thank you for watching, and let's get into the video.
I just want everyone to bear in mind that that's actually very good for miners. Even though the gold price is going down, it's very good for miners that we are getting a drop in the energy prices. So here is gold, and one thing I want to do is when things get confusing and there's a pullback is extending, it's a very good idea to go up to the higher time frames. I've annotated this chart quite a lot already. Let me just remove that number for now and remove that and the neckline. So we were looking at the wash period and thinking that we were all expecting a no increase. Again, when I say that was all being expected, it's kind of interesting that everybody automatically expected that, because again, you're well above your rates. We've drawn this kind of channel, and you may find the channel probably runs something like that. Let me just correct that and extend some of the lines. You may find you make it to the bottom end of that channel, which could be, in the 3000s over here. By the way, let's just remind everybody on this channel, we said 2000 breakout in 2024 that you were going to run 3000. You did. You got multiple setups. You continued to run 3000 and eventually overshot to 5.6. So a run back to the mid 3.8s or 3,800 or just below 4, which you've already done, by the way. You've broken 4,000, is not the end of the world. We talk about 3 big sell-offs. And when I go up to the bigger time frame, I'm looking at this now and saying, well, here's your major trend. And I'm doing away with this shooting star flash and the hammer, because it was negated and you came back on trend. More and more, when we look at what we call the slap in the face, the real sell-off started here where you couldn't. This one was very quickly brought back into the range. So we talk about 3 major sell-offs. We're extending that with the price behavior. And I think you made your first impulse here. So I'll just draw that. That's your first impulse, this whole upward move and down into that localized low at 4,000. And we think you're making a second impulse with a low still to be found on the weekly time frame. And we expect 3. So you'll probably have some form of a rally and then a third sell-off, usually the weakest. And then you will start to be in a situation where we might start thinking of reversals. So gold is continuing down, and that's going to lean on silver too. So technically, this is a medium to reasonably long pullback period after a blow-off event, a blow-off momentum event. The floor by price is a difficult call for me. Typically, we would look for a technical pattern which had a sort of a downside. Rather than getting a technical pattern, we're just seeing this pullback in the channel, as I'm illustrating here. Quite usually, if you've drawn the channel correctly, you'll probably meet the lower basing descending grind line, which I'm drawing in gray here, at some point. Depending how fast you do it, it will depend the value. And we don't think that's going to be the final. We think you'll go up and over one more time. That was the point I'm making. Although the third sell-off is usually the smallest. So I'd say the first, if we're treating this as the first, which is our personal new view, was pretty violent. This one is grindy and painful and never-ending by time frame. So if you look at the duration, it's very typical of second impulses in selling. We call them bloated and lengthy. You can see the time frame that's been going on. The first one started probably here and ended there. You did get some volatility here, we know that, but the general trend was brought back up. So you can see the time duration. It's a more hurtful one, the second one, because it just doesn't get done. It just keeps coming at you. This was violent, but very violent in that candle. So our expectation is you'll have some sort of localized low and another up, and you'll still have a third sell-off before you're likely to break out the channel. So we don't think the next month or two is going to be particularly positive for gold. We would say you're going to have as much opportunities if you're a technical short time frame trader trading it short. Not something I'm interested in doing, but some people that are low time frames could be making profits as traders. In terms of buying and investing, you're going to get, these are very good accumulation points, and we're in the blue pot thinking. I only look on the long side on gold. I think that will be a good entry to buy gold and or silver. And wherever that low comes in, it'll be a good entry. And I would expect that close to being the final. And then you'll recover, but you won't go straight to a melt up. You'll recover with ups and downs and churns and grinds, to the upside, and before eventually making new highs. In terms of our bull expectations, particularly where we've given numbers on silver, we still see that in the years to come, you'll be running $333 and going higher. So on the big time frame, we haven't changed any of our opinions. This is just a longer pullback than most people expected.
While the rest of the market falls into doomer mode during this intense pullback, Francis Hunt is stepping in with a completely different perspective. He views this as the ultimate trade of his life. Using his proprietary Hunt volatility funnel method, Francis reveals that his long-term conviction has never been stronger. He lays out a powerful roadmap showing that smart investors anticipate these periods of progress decay as natural pauses after massive breakout moves. Francis candidly shares that he refuses to sell his silver stash, only strategically moving assets to escape aggressive Western tax structures, even with silver experiencing a major 6-month candle rejection and pulling back toward $58. He emphasizes that his early accumulation under $30 leaves him entirely unbothered by the short-term noise. Let's get back to the interview.
What I'm going to draw is just remind everybody, because it's when everyone's all doomer that they need reminding of the big picture. And I'm quite happy to be the one to do that because it's easy, and it's something I have very, very little doubts about. The greater the time frame you go up, the more conviction you can have on those things. So just to remind everybody, the upside, this is an upside HVF of many, many years standing. I call it, the trade of my life, because it's essentially started in 68. You're talking way back here, 67, 68, started a move that began the run up to that high that was the 80s. And I was still a schoolboy, obviously, in the 80s. We warned everybody This is bit, I'm going to, again, it sounds a bit salesy. I apologize for this. The one unique thing about Hunt Volatility Funnel method is instead of just giving you a final target, a stop loss, and an entry point, it also tells you when you could expect on your journey path pullbacks. Smart people realize price behavior does not go up in a straight line, even in breakouts. This is a breakout trade. We got a squeeze within a squeeze. Brent Johnson was here calling, it's crazy. All the silver guys getting excited about 25 again. It turned out the triggering event candle there for the primer. It turned out the major triggering event. And then we charged up and we ran our second interim. What happens at a second interim is you go into progress decay for a while, which means no longer going up. Time passes and you go down. And here you have a huge shooting star on the 6-month time frame. In fact, it's extending. When I did a YouTube on this and that body was smaller, now it's even extended a little bit. It's almost not so much a shooting star because the candle body is starting to get longer. It's getting lower. And the 6-month is all but done. So January the 1st, right the way through to the last day of June is going to be around Tuesday next week, trading days. So you've got today, Thursday, Friday, and Monday and Tuesday of a 6-month period. We're literally done, and it's going down during this period. That is a major rejection and sell-off after running the second interim. We got the leverage long traders that we put in for this explosion upside to our second interim out at $118. We even, when we gave a tweet out to people who are followers for free, it was $111. That was on the last day of January before I went off to ride motorcycles. So that was probably the last best time to have got out. Talking about leverage trading. I don't sell silver. I literally, because I moved location, sold one stash and replaced it in another location because I wanted to divest fully from the United Kingdom because of unrealized capital gains and tax scavenge mode being enacted by the governments in the West. But apart from that, I don't sell silver. I replaced it if I have to just reorganize it. I only add. So this will go down, and I am most of the silver I've bought has been at the 13, 14, 15, 20, 25, 28, 29, even paying that in the UK up to $30. And I'm not concerned that we're 58 at the moment. It's double probably the most expensive price I paid from 3 years ago. And it's only the most recent investments I've done in the last year or two that you might find that you're heading towards potentially being underwater.
Ultimately, Francis Hunt's core message is clear. Do not let short-term market manipulation or painful grinding cycles blind you to macro reality, while the crowd panics over extended pullbacks. The Hunt Volatility Funnel method proves that these technical filters are exactly what weed out weak hands before the next parabolic leg up. Francis notes a silver lining that most people are completely missing. The recent drop in energy prices is actually providing a massive hidden fundamental boost to precious metals miners, even as spot prices take a temporary breather. This structural advantage means the industry is quietly building incredible strength beneath the surface. Instead of watching the daily tickers in fear, true wealth is built by looking at the highest possible time frames and recognizing these moments for what they truly are. Rare windows to align your portfolio with the smart money. Are you going to let the noise scare you out of your position, or are you ready to ride the wave to historic new highs? Let us know your thoughts in the comments below. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.